If you can understand order blocks, you can use any strategy to make money in the markets. Being able to identify these key zones will allow you to understand where institutional traders and market makers are placing their orders. So in today's video, I'm going to share with you how you can identify order blocks and how you can use them to become a profitable trader. So let's talk about order blocks and their significance in trading. Being able to identify order blocks within your trading strategy can be very vital to your entry and exit points, right? Every single time a candle is formed, it could potentially be used as an order block. Being able to identify high probability versus low probability order blocks will allow you to understand where institutional and these big money players are placing the orders. So understanding order blocks is very significant, and I'm going to be showing you guys that in today's video. So what is an order block? An order block is an area where large market participants have placed significant buy or sell orders. So when we're talking about large market participants, we're talking about institutional traders, market makers. These big market participants run the markets. So we want to be in line and we want to understand what they're looking at so we can place our trades within the same region. This means order blocks are key levels on a chart, and understanding the different types of order blocks and what makes a high probability versus low probability order block is very important. So order blocks can be very difficult at first, but once you understand the high probability versus low probability order blocks, you'll understand how markets move and where you want to be placing your trades. We always want to be placing our trades in high probability conditions, and we want to maximize our potential to make money in the markets. Institutional traders and market makers will place their orders in these areas, which will have a significant impact on price and liquidity. So being able to identify these key levels will be very important for our entries and exits. So these institutional traders and market makers run the market, so we want to understand where they're thinking and where they're placing their orders. So as you know, institutional traders and market makers have a significant impact on price. 90% of volume is made up of institutional traders, big hedge funds, big market makers, and only 10% is retail. Us as retail traders don't have a big impact on price. So if we understand this, we want to be in line with the market makers and institutional traders, and we want to be placing the same trades as them. So now let's get into different types of order blocks. As you can see right here, right, we have different types of order blocks, and there's two different types of order blocks, the ones I'm going to be talking about today. It's reversals and continuations. So a reversal order block, as you can see right here on the left hand side, is when price takes out a key liquidity level and we end up having a reversal towards the downside. So it is the up close candle that takes out liquidity before the downside. So as you can see right here, we have a big push down and we return back in towards this up close candle. So this level should now act as a resistance level for moves towards the downside. So this is a classic example of a reversal order block. And as you can see on the right hand side, this is a continuation entry. This is my personal favorite and how I like to use order blocks. So as you can see right here, we were in a downtrend, but you can see we ended up breaking back above resistance, and now this level should act as support for moves higher. So as you can see right here, we have a classic break and retest, which also has a down close candle, which is an order block. So these are the levels I'm going to be looking for to hold price for moves back towards the upside. So these type of continuation plays are my personal favorite and how I like to trade order blocks on a daily basis. So now we're going to be determining what is the difference between a high probability and low probability order block. So the more confluences, the better. In trading, we always want to have multiple confluences. That is what makes it a higher probability trade. So what I like to look for on an order block is I like to look for inefficiencies left behind. I like to look for retests. I like to look for untapped liquidity. These are just some of the things I like to look for. I'll be showing you guys more examples here in a second. So when I'm talking about inefficiencies left behind, I want to see an imbalance. I want to see a fair value gap. I want to see some sort of inefficiency, which gives me displacement, right? If we have displacement, that means it's a high probability chance that it's going to come back, and we're going to use that level as continuation towards the upside or downside. When I talk about retest, I'm talking about support turned resistance or resistance turned support. And what I also talk about is untapped liquidity. So I like to see liquidity above where levels that we can target, right? We always want to have a draw on liquidity where price is most likely going to head. What I also like to look for is breaks of structure or change of characters, and also sweeps of liquidity. So higher probability order blocks always occur around key liquidity levels, right? So there's always some sort of liquidity, either a sweep of liquidity, a break of structure. These are very key levels in the marketplace. That's where all these institutional traders and market makers are going to be placing their orders, because around these areas, there's high probability setups. So as you can see in the left hand side, this is a high probability break and retest. As you can see, we end up sweeping liquidity down here, we end up breaking structure towards the upside, we leave an inefficiency, we have now a down close candle. So this level should act as support for moves higher. So as you can see right here, we end up coming back into this level, this inefficiency, this order block, this break and retest, and now we have untapped liquidity. You can see we end up reversing back towards the upside where there's untapped liquidity. So this is an example of a high probability order block towards the upside. And as you can see on the right hand side, this is what is classified as a low probability order block. As you can see right here, we have no inefficiencies left behind. We have no breaks of structure. So this level order block is going to be a lower probability order block. As you can see, we ended up running it right here. So this order block ended up being invalidated. So this is going to be classified as a lower probability order block. Without further ado, let's go straight into some examples that I have for us today. Alrighty, so we're on my first example here on the NQ. And let's look at the higher time frames. Let's analyze to see what's happening on the higher time frames. So first we can mark out this key pivot level right here. You can see, right, multiple touches. We ended up using this as a retest towards the downside, and now we're getting back above this level. So now what we like to see on the higher time frames is the potential to use this retest level for moves back towards the upside. So we also have, what do we have here is liquidity towards the upside. So now we can head on to the lower time frames. So right here, we're at close to market open here. So let's see what happens with price action. So you can see the first minute candle closure on the 5-minute chart, right? We have a sweep of liquidity, and now we have a market structure shift back towards the upside. Now we can head on to the lower time frames real quick. Right now we're on the 1-minute time frame. So you can see right here, this is the down close candle that ended up sweeping liquidity, right? So it ended up sweeping liquidity. Now we have a market structure shift back up towards the upside. So what do we want to do? We want to see this level hold for now moves back towards the upside, right? Once we get above this level, you want to see moves back towards the upside. And where do you want to target? You want to target external liquidity being the highs above. So as we play the tape here, you can finally see we get our market structure shift on the 1-minute time frame, right? We ended up breaking above these highs, right? That's our market structure shift. So now what we want to do is see these down close candles act as support for moves higher towards the upside. So now what we want to do is see this level act as support for moves higher. As we play the tape here, right, you can see we get it right here, right? You can see price comes back down into these down close candles. You can look to take positions here, stops all the way at lows. So the targets here will be a buy side liquidity right here, and you can also target these double top here on the 1-hour time frame, right? There's going to be a lot of liquidity resting above these levels, so you can look to target these areas. So now we'll play the tape. You can see price now is above this level and end up taking out this key liquidity level. Now we can head on to the 5-minute chart and see what it looks like on the 5-minute time frame. So now we're on the 5-minute time frame. You can see what's happening here, right? So price gets above the break of structure levels, right? It came down, swept liquidity, and now it's heading back towards the upside. So now we're in an uptrend. So what we're going to do is be using these down close candles. As you can see right here, a down close candle in an uptrend. We want to use this level as support now as we break above, right? So we break above this level. So now we want to use this level as support for moves higher, right? Which is the higher time frame levels on the 1-hour chart, as you can see right here. That's where all the liquidity is resting. So now as we play the tape, you can see price comes back down into this order block again, but right, you can see it wicks underneath, but it holds this level, so that means we're bullish. We can head on to the 1-minute time frame. You can see what's happening. Obviously, it's a little bit messy. Let's clear off these levels real quick. Right here, as you can see, we only have in this whole uptrend right here, right? In this whole leg, on the way up, right? We only have one down close candle in this whole uptrend. And where is it? It's literally right here, right? So this is your down close candle. You can extend it over to price. So as you can see on the 5-minute time frame, right? We have a 5-minute order block. And then if you go into the 1-minute time frame, you can refine your entries. So you can see here, this is your 1-minute order block. So in this case, you can look to place your longs right at the top of the order block right here. You can have stops just a break below market structure, which is right here. And your targets in this example, it can be that 1 hour draw on liquidity. It's that draw on liquidity on the higher time frames where there's a double top. So if you look on the 5-minute, what we also have here is a fair value gap, right? So we have a fair value gap on the 5-minute time frame. As I mentioned, a lot of confluences. If you go into the 1-minute chart, right, we also have this 1-minute order block. We also have this retest on the 5-minute. So this is a high probability trade setup, right? So we have it come down. There's displacement that I talked about earlier, right? A lot of confluences. What I like to see is inefficiencies, retests, and then potential order blocks. As you can see, there's all three in this case. We end up coming back down into price. So this is our signature. We want to take longs in this area, and now we'll let price play out. And you can see it absolutely launches towards the upside for a very nice trade. As we can keep playing the tape here, now we want to clear all these levels out. So now after sweeping liquidity, right, where are the down close candles at? The down close candles are literally at this down close candle right here. This is the only down close candle in the whole price run. So this level should now act as support for moves higher. We can keep playing the tape. You can see price comes down, holds this down close candle, and now it's heading back towards the highs. And you can see price ends up going higher. And in this case now, where are the down close candles here, right? We have a strong push up. Where is the support resting? The support is resting at these down close candles. So we'll play the tape. You can literally see where price bounces perfectly. Price comes all the way back down and towards these down close candles. If you go into the higher time frames, you can see there's also a fair value gap. This is the only down close candle on the 50-minute time frame. There's also a fair value gap, an inefficiency. This is an order block on the 50-minute time frame. You go into the lower time frames, you can see price comes all the way back down into the one area, which is that down close candle. And now you can see price ends up moving back towards the highs, right? As you can see, in an uptrend, these down close candles are respected very clearly. So now we're going to be going on to some live examples that actually use the order block in real time with my Discord group. As you can see right here, this is my TradeZilla stats for the trade, right? I took Tesla puts towards the downside. I've talked about this example plenty of times, but as you guys know, this is TradeZilla, right? I imported my broker statements into this platform. So everything here was also recorded live, and these are all my trade executions. So as we go on to the example now, what was I seeing, right? So this is the daily chart on Tesla. You can see we have a big gap down in the markets. We came back up to try and test essentially these lows right here. So we tried getting back inside the gap level, but you can see we swiftly rejected this level. So now we go on to the Tesla 1 hour time frame. What am I seeing here, right? So I'm seeing price reject these gap level twice. And now we're forming essentially trendline liquidity below. So coming into this day, I'm bearish, right? I'm looking for Tesla shorts towards the downside. So we go into the 5-minute time frame. So we're on the 5-minute time frame here. We'll play the tape. So you can see Tesla right here. It ended up bouncing off of yesterday's close. You can see right here Tesla, and it came back up towards where these up close candles. As I mentioned, this one is not a high probability order block because, as I mentioned, what you want to see is inefficiencies left behind. You want to see displacement. You want to see clear levels for a retest. Obviously, you can see right here on the 5-minute time frame, we ended up holding this up close candle in a downtrend. This is going to act as resistance for moves lower. So now you can see what's happening with price. We leave an inefficiency behind, right? So we have a 5-minute fair value gap, and we also have this order block level on the 5-minute chart, right? So this is going to be a high probability area we can look to place a short trade in. So we go into the 1-minute time frame. As you can see here, I ended up getting shorts around these areas, right? If you go on to the executions, I ended up getting shorts around this area, and this was based off of the higher time frame order block on the 5-minute time frame. We also had higher time frame levels. We had previous day low. We also had 184. So we go back onto the 5-minute time frame here. You can see what happens with price. So price comes back up into this level. You can see it taps it perfectly. You can see price comes back up to the bottom of the order block. It wicks into the order block, but it has a bearish candle closure, so you know you're in a very good position. As you can see, I'm short literally at these areas. Stops just a break above this market structure, and then you have targets being below, which is that 184 level. And you can see Tesla absolutely just melted towards the downside, right? And you can see how price action delivers with these higher time frame moves, right? You can see this was the only high probability order block that left an efficiency behind. We also had targets being low of day and below. We also had targets being that 184 level and below. And you can see how well price just delivered straight down towards the targets. And obviously, you guys are going to be like, oh, this is a hindsight move. I literally have my executions here, literally executed this trade perfectly with the Discord group. As I mentioned, I do this live every single week. And you can see how perfectly price moves all the way down into this 184 level. So that being said, now I'm going to be heading on to my second example that I have for the day. So right here, we're on my second example for the day. Right here is on NQ, right? It was last Wednesday where we had FOMC. You can see price came up into these areas, right? This was a very key level. Price ended up breaking below, and you can see coming into FOMC, right? We ended up rejecting this level perfectly for a retest towards the downside. So once it held this level, we were bearish coming into the markets. So now we'll head on to the lower time frames. So now we are on the lower time frames right here. We'll play the tape out. So you can see right here, price came all the way down, swept this liquidity level, and now we're looking for a potential bounce on Tesla. You can see right here, we leave in a huge inefficiency on the 5-minute time frame. We also have these up close candles, right? So where are we going to be looking to take shorts on the NQ, right? Around this inefficiency. Why are we going to be looking to take shorts right here? Because we have a bounce that swept liquidity. If price wants to stay heavy, right, it left an inefficiency. This is also the down close candle on the 5-minute time frame. So this is going to be looking at a high probability area where you can look to short for that first bounce towards the downside. So we'll go on to the 1-minute time frame here, right? So this is the order block level. You can see price comes back up here on the 1-minute time frame. It tries to close above this order block on the 5-minute time frame, but you can see the wicks, right? The wicks do the damage, but the bodies tell the story. So as you can see here, the body candle closes underneath this order block. So that will give me the confirmation that I'm looking to head short. So now we can look for this up close candle to short on the short side. So price comes back inside this level. I look to short right here, stops just to break above, targets are going to be low of day, right? Targets are going to be low of day. And this is my trade thesis right here. And you can see that price, and it ends up coming and taking out low of day here. As always, I show execution and proof, and you can see right here, we end up having a very nice trade towards the downside. I end up capturing a very nice move on the NQ, ended up buying on this 1528 candle, and you can see we had a nice push towards the downside, and that's where I look to scale. And you can see right here, this was a very nice trade. And if we go on the higher time frames, look what's also happening here on the 1 hour time frame, right? In this whole price run up, right? In this whole price run up, we have what? We only have these down close candles. So, right, this level should act as support for moves higher, right? So we can use order blocks as entries and targets on the higher time frames, right? So as you can see right here, we now go back onto the lower time frames. You can see the reaction that price has once it taps on this order block on the higher time frames. And you can see price ends up having a reversal on this 1 hour order block. So you can see how price moves, right? Price moves from order blocks to order blocks, and you can see price ended up reversing after tapping into this 1 hour order block. So you can see how these order blocks are used within the markets and how vital it is to understand what are order blocks and how can we use them to make money in the markets. So if you guys did enjoy that video, make sure to subscribe and drop me a like, and I'll see you guys next video.